It's true. Across the globe, women aren't as prosperous as men. Gender inequality is a pressing moral issue, but we forget it has massive economic implications. If you were to put all of the women who don't have access to formal financial services in one place, they would make up the third largest country in the world. That means an entire population without bank accounts, credit cards, or other tools you and I likely benefit from daily. Prosperity for women starts with inclusive policies, products, and people around the globe, and the investment to make it happen. Welcome to the Making Finance Work for Women podcast. My name is Sonia Kelly, and I lead Women's World Banking's proprietary research division. Join me as I speak with changemakers around the globe to deconstruct the social and economic exclusion women face. We'll discover new evidence together and drive action to accelerate women's economic empowerment. Because a leg up isn't a handout, it's a global game changer. Indeed. Welcome and thank you so much for tuning into the Making Finance Work for Women podcast, which is now streaming on YouTube and available wherever you get your podcasts. I'm your host, Sonia Kelly. If you're listening on YouTube, you'll be able to find additional insights and resources linked in the description of the video below. Before we get started, I'd like to give a special shout out to the sponsor of the Making Finance Work for Women podcast, which is Ernst & Young LLP. EY is a global leader working across assurance, consulting, law, strategy, tax, and transactions. EY teams ask better questions to find new answers for the complex issues facing our world today. You can visit their website at ey.com to explore their latest insights and services. Now let's jump into the show. Today, we're going to be talking about climate change solutions and specifically how one fintech is ensuring women farmers' futures. I want to give a little bit of an intro to this topic because I think it's tremendously important that we understand what's at stake here. The climate crisis that we're seeing around the world is a women's financial inclusion challenge. My team at Women's World Banking has crunched the numbers, and we've discovered that 753 million women in climate vulnerable countries do not have an active bank account or e-wallet. This means they can't manage their money actively. It means also that if they're keeping money at home in cash, it might be at risk of climate emergencies. We also know that 880 million women would not have a way to receive an emergency support payment after a severe weather event. And finally, we know that 840 million women in climate vulnerable countries would find it difficult or impossible to cover the cost of an emergency. And that's a lot of what we're going to be talking about today. Now, in our last episode, we described 3 areas of financial inclusion intervention amid climate change. And these areas are financial inclusion for resilience, financial inclusion for adaptation, and financial inclusion for mitigation. Now, today we're going to be talking primarily about resilience and a little bit about adaptation. So I'm going to remind you what those things are so that we can use those terms kind of more fluidly and interchangeably. Resilience is the ability to bounce back after a climate shock. So in the US, for example, we just had Hurricane Milton last week, which was a Category 5 hurricane just a day before it hit land in Florida. And my sister-in-law lives in Florida near where the hurricane hit. She's okay, but it was stunning the number of tornadoes that affected her area. She's still without power nearly a week later. And her community is thinking through how to build back after all of the downed trees and damaged homes and power outages and storm surges. And so that building back, the ability to bounce back, that's climate resilience. Now, adaptation includes the steps that we all take to adjust our homes, our businesses, and our lives to new climate realities. Where I live, there's a huge risk of forest fires. So people are clearing trees on their land so that their homes are insurable in the first place. That's climate adaptation. It might be for a farmer somewhere having drought-resistant seeds. It might be for somebody that has livestock, like having a shelter for their livestock to go under. It might be for a woman that has a small shop, having some kind of a cooling solution so that she can actually stay open, and that staying open might not be a risk to her health in the middle of the day. I always like to bring these concepts back to a real world story of a low income woman in an emerging market and their experience. So, I want to talk about a woman in India. This is Basanti Devi. She's a 43-year-old woman from Guwahati, Assam, and she faces numerous challenges in her daily life. She has a focus on managing her household. She has a small chana mixture industry, and she deals with agricultural responsibilities because her family has some land. Now, despite her multiple sources of income, her assets are constantly threatened by floods, by wild animals, and the sickness or death of livestock. Now, a recent flood devastated her crops, leading to significant financial strain and forcing Basanti to borrow money and sell animals just to make ends meet. When we at Women's World Banking asked her about insurance, she knew very little about insurance in the first place. And let me tell you, insurance is so hard to explain to someone. Now, Basanti's limited knowledge of insurance highlights the critical need for better awareness and access to insurance products that can provide financial security and resilience against climate-related disasters like the ones that she's experiencing. And Basanti's story underscores the importance of insurance in safeguarding livelihoods and ensuring a stable future for her family. Now, I'm personally more and more convinced that gender equality is the most urgent climate issue of all. Women with access to financial services are better equipped to deal with the shocks related to climate risks and to build their own resilience. And with that introduction, I'd love to introduce our guest. Our guest is Rose Goslinga. She's the president and co-founder of Pula. She's a visionary, so I'm really excited to talk to her. She's been an innovative agricultural insurance and technology leader, and her company is dedicated to empowering smallholder farmers across Africa. With nearly 16 million farmers reached since Pula's inception in 2015, Pula has redefined agricultural finance, ensuring that communities can thrive despite the unpredictable challenges of climate and market volatility. Welcome, Rose. Now, Rose, you're a bit of a hero in the financial inclusion space. So I'd like to start by asking you about your origin story. What brought you to this space of financial inclusion?
That's a great question, and thank you so much for inviting me. Um, I look, I grew up in Tanzania. My parents ran a hospital. I kind of come from a family of missionaries where, like both my grandparents were missionaries in Indonesia. And I remember when I wanted to study economics, I remember my dad asking me, "You want to study economics? You want to learn about money? But I want you to do good in the world, right? Why would you want to learn about business? Business people, capitalism, it doesn't necessarily resonate with my family values, or so to speak." And I remember when I like now when he explains my business, my father is like 77 years old. He will explain, "My daughter insures farmers against drought." And I think there's this really beautiful arc between, if you study business. I wanted to understand how people made money. I grew up in like a place where my parents wanted to do really well, or wanted to really do a good thing. Like my dad was a doctor, he ran a hospital. We rebuilt that hospital. We rebuilt two hospitals, but at some point our hospitals were robbed. And I really felt very
Mm.
frustrated about that. Like how, so my parents are genuinely good people, but this isn't working. Like this kind of development approach isn't working. And I always joke that, like two generations ago, people were missionaries. Like one generation ago, people were development aid workers. Our generation, they're capitalists. And I think it's kind of a natural progression. We want to, like, I felt very strongly about building a business that would build the place where I grew up. I've lived in Kenya now for 15 years, and I really call it home. And I feel that what we do, often when we start in a country, the insurance penetration will be maybe 1, 2, 3%. In some of our mature markets by now, the business is about 10 years old. The insurance penetration is around 40%. Like going from 3 to 40 is a huge leap. And
That's
I think
huge. Yeah.
it's really when you like I feel immensely proud when I can say like, look, in this market when we started, there was one insurance company who was offering this or agriculture insurance against climate risks, but now they're 15, right? So that's really what I would say, what is building a market is really about. And personally, I really felt very strongly about that. My mom started a women's development group, kind of one of the very early VSLAs, and she probably worked with this group of about maybe 50 women for 25 years. And so I felt very strongly about like I wanted something that would scale. And at the same time, like Pula reaches millions of farmers. At the same time, I feel that we very strongly that we should be giving a service as good to those 50 people as to those 15 million, right? So I think that's when it like for me, like yeah, I think it's very much I've really been brought up with the idea of you need to do good, but you also need to do well. And I think in in what I try to do or what Pula tries to do, we always have those two core values at stake. Like we want to build a business, but we also want to make sure that this business really delivers for the people it serves. And I really think that's also how you create, for a lack of an overused term, shared value, right? And it really means that your business will grow beyond that. So yeah, so I would say it's a multi-generational how did I get here story, from, missionaries in Indonesia to doctors in Tanzania to now insurance salespeople in Kenya and, 19 other African markets and 2 Asian markets. So I'd say that's, yeah, it was in Dutch, we would say it came with the spoon of oatmeal.
What does that mean? It came with the spoon. Oh, it's like from when you were younger. Got
Yeah,
it. Yeah.
basically from when you ate your first like your breakfast oatmeal, like you get spooned into like you should do good, you should do well.
I love that. And you definitely are a market builder, which it just strikes me that your motivation was creating sustainable solutions for people. And we living in a time when there's a lot of rhetoric around insurance maybe not being as sustainable. Like insurance premiums are going up, insurers are pulling out of places with huge climate risk. It feels like this is a big inflection point, and it also feels like Pula has found ways to innovate to make it work and make it sustainable. You certainly chose a challenging space in which to operate as a market builder.
Sure. I would say, look, you started off with saying, look, you just had Hurricane Milton, Hurricane Helene. And I think one of the things that's really important and that has helped our business to some extent is that I think it comes back to maybe something that's very unpopular in the US or that has a very bad name, but in Europe is much less controversial, is that insurance should be compulsory and should be mandatory, right? It should be mandatory across because if something is mandatory, then the burden is shared, right? I think what we're doing is when you build insurance markets, you end up insuring Malawi. Southern Malawi is this is a landlocked country that ends up having hurricanes, right? That's kind of it sounds like incredible. Like they're landlocked, but they still get hurricanes.
I actually didn't know that. Wow.
It's insane, right? It's insane. It's a country that gets droughts, floods, and the southern part also gets hurricanes, even though it's landlocked.
Huh.
And I would say, look, you want to, if you're looking at insurance, it's all about making the base as big as possible, right? It's really hard for, if there was, I would say, if you're looking at the US, for example, if there was a mandatory climate insurance that everybody had to contribute to in the US, that would probably solve some of the problems you're having around, that you can't get in housing insurance anymore in Florida, because the problem is you're only getting those people in Florida that are very high risk. You're not able to offset that against other risks. And I think that's really, if you go back to the principal insurance, it has a bad name because nobody really wants to buy insurance. And I think that's also how we started and why the business has been successful. We've been very cognizant about you're not going to wake up in the morning thinking that you want to buy insurance. I'm a total insurance nerd. I love insurance math. I like writing insurance policies. Like this is like, I like going through them. And when I buy an insurance policy myself, like the other day, I was trying to buy a life insurance somewhere. And I live in Kenya. I travel to lots of places. I was going through the most complex questionnaire, and I wrote back to the email to the insurance company. I'm like, you have really poor user experience, and I am only buying it from you because you're the only one that is going to offer me this. But still, right? I think, for insurance companies have a bad name in terms of that. At the same time, we don't often think about it as well. Insurance companies don't often think about that people don't really want to buy,
Mm,
right? So they come off and say, "Oh, this is going to be so amazing." It's a cost, right? And you're
yeah.
just going to have to bear it. And if more people bear it, then the cost is going to be brought down. That's just the reality of it, right? And I think that's really what we try to do when we're building a market is like, okay, so we need to get more farmers in Malawi signed up. Let's work with government. Let's work with who can create this single payer that is going to, get as many people signed up, because then you're going to have Northern Malawi is surprisingly good, right? Just
Mm,
random. Or if you're looking at Africa's not only drought prone, there are many like areas that are very high, have a lot of high productivity. Same for Asian markets. So I think it's all about creating that big pool of payers. And maybe for like 5-6 years, you will have no risk. And in those 5-6 years, somebody else might have a risk that you are effectively distributing this out of, and that you're weighing, like creating this kind of big pool of things. Like I think if you think about the future of insurance, it can't just be like the insurance market currently is hurricanes in the US, wildfires in California, floods in Germany, earthquakes in Japan. And the problem here is that that's not big enough of a base.
mm,
I think it's companies like us are trying to create a wider base, right? Like in our case, it's African farmers. But if at some point in my previous job, I worked for a large agricultural company. I looked at huge 200,000 hectare farms in what is now kind of contested territory in Ukraine, right? But it's you have to kind of like there are farms all over the world, and if this was kind of a wider base, this would work better.
mm. Yeah. And it seems like you're working kind of on both sides of the spectrum. Like you're working to de-risk individual farmers a
Mm-hmm.
bit, and also to increase market penetration so that that risk pool is shared. And I think that's a really smart strategy. Um, okay, like changing topic a little bit. At Women's World Banking, we talk a lot about gender diversity among leadership, and you have a male co-founder, which I just love. That in your case, it's like a man and a woman working together, which I would guess means certain things about what the two of you bring to the table and what you end up seeing. Tell me more about your partnership, like how it came to be, and how you've worked together to approach the insurance space with innovation.
Sure. I have known my co-founder for 15 years at this point. He was just named as one of the Time 100. He went to New York the other day and had like a full red carpet experience, which I kind of like lived vicariously. Like send me more pictures.
Oh,
I
yeah.
think.
So he's like one of the time. What is it? The Times 100
Yep.
people.
Yeah.
Like, and yeah, it went to this award ceremony. Congratulations. I mean, I
No,
think
I
that's
think
a huge reflection on Pula and what you've accomplished together.
look, I think that's, and I think, so here's the thing, right? I think between the two of us, we're very different people. Like, and we've always known that. And I think we're in general very generous to each other. Like generous in terms of, look, if he does well, we will do well as a business. If I do well, we will do well as a business, right? So I think
Mm,
that's at the core of it. I think at the core of it, whenever I wouldn't say we never fight. We definitely fight, right? This comes with like kind of any co-founder relationship says that they don't fight with their co-founder. Like that's not a real relationship, I would say. It's um, but what I would say is at the core and from the beginning, I think we had a very instant connection in terms of that. I thought he was a very intelligent guy. I met him. It's a fairly hilarious story. I met him through. We were introduced by a CEO of an insurance company. He's an actuary, which is basically a statistician for insurance. And I had this spreadsheet that I was effectively writing. I was writing an insurance algorithm. So basically,
mhm,
if you get this much rain over this period plus this much rain over the next period, then your crop should be fine. But if it falls below that threshold, then you should get a payout. And I was doing that over 30 locations with about 30 parameters, and I was trying to optimize for price. And I basically had a pretty heavy spreadsheet set up, and
Yeah,
the
that
spreadsheet,
sounds heavy.
well, it's not very complicated, um, but the spreadsheet kept crashing. And I remember talking to the CEO of an insurance company. I said, "Well, look, now that we're scaling, we're not a pilot anymore. We want to do this in 30 locations, but I can't get the maths to work." And so he said, "I know exactly what you need. You need an actuary." And I was like, "What's an actuary? I didn't even know." He's like, "Well, I know just the person for you, and one day he'll be a CEO. He can even talk to people because actuaries are known. Like actuarial jokes are, when I'm an extrovert, I talk to my shoes, right? They're usually quite introverted people, but he's a very extroverted person. So I got to know him. He basically, I gave him my spreadsheet problem. He said, I will look into this and I'll get back to you in about 4 weeks. And 4 days later, he came back to me and said, it's done. And I remember, and he later told me, it's really not a complicated problem, Rose. You just don't know how to use Excel. I was like, I am not that bad, but I'm just not as good as you, right? Anyway, so he came back after 4 days, and he'd exactly done what I wanted him to do, and I was like, man, I should hire this guy. And we started doing a lot of work together. And when I started the business about 3 4 years, maybe 4 or 5 years later, after this happened, I knew exactly who to call. I was like,
Mm.
okay, he'd gained some more experience. He was working for a large corporate, and I said, look, I want to start this company. And he was like, sure. He was kind of half in, half out for the first 2 or 3 years, and then we raised our first round of money, and then he came in. And I would say,
Mm.
we've in that time, right? Because it basically took a couple of years, 5 6 years before we became co-founders. We really kind of got to know each other, and then over the last 7 8 years, we've gotten to know each other a lot better.
I'm
And I think
sure.
the key thing is that you're just, he's where, strangely enough, he's the book smart person. I'm the street smart person. Oh, even though he's the actuary, we can be very, we can play good cop, bad cop. Sometimes I'm good cop, sometimes he's bad cop. We're very, you know, he can be very strategic and long term. And I basically look at what is the next 3 weeks and what do we get done in those next 3 weeks, right?
Mm.
I think if you're looking at a co-founder, it doesn't matter what gender they have, but you do need to look for somebody who's actually quite different from you,
Mm.
um, who is going to be that complementary skill set to make up for the pieces that you are not going to be so great at. He's great at Excel. Like I can do the storytelling, getting the fundraisers in, whatever it is, right? Although he does tell great stories too.
And now, a word from our sponsor. EY applauds Women's World Banking's 45-year legacy empowering women through financial inclusion. Together, we have a common vision to build a better financial services industry, one that is stronger, fairer, and more sustainable. Find out more on ey.com. That's great. Yeah, and I think that reflects what the data shows us about management. I mean, diverse teams are what drive better decisions, and a lot of times that is gender diversity, but a lot of times it's just other kinds of diversity too. And I think that complementarian approach um, to decision making and strategy and success is clearly it's worked for you all. You've now expanded to serve 22 countries around the world. And I'd love to hear a little bit more about that journey from you working on one spreadsheet to now serving 22 countries and millions of farmers insured.
So I think it's still a look. When we started, spreadsheet, we had two. I remember the first year or so, we had two tables that we were subletting from somebody, um, and and when we 3 years in, when we got our first office, there was like the old team and the new team, the people who came with the new office, right? And I think, look, personally, like I said, I'm the kind of what do we need to get done in the next 3 weeks, right? And for the first 3 years, we didn't raise any money. We bootstrapped the business, so we basically looked at who is going to
Wow.
pay for what's the revenue, where does the revenue come from, and I didn't necessarily. Well, I did it on purpose because I'd raised money before, and I found that there was too much control from our outside shareholders, and I didn't like it. I found
Mm.
that very, very stifling, very well, just not good for really kind of growth. And I was like, look, if you're, I think this is actually quite, I think it forced us really to look at where is the revenue, who is going to pay for our service, right? If you, for the first 3 years, we never had more than 3 months of runway. And like for my co-founder to quit, we raised some money so that he had a bit more security that he could kind of like give up
Mm.
his blue chip job for. But I think it's just really important. If I think also think about other founders is to create that. It creates a lot of focus around, you know, I joke, I'm not that good in spreadsheets or finance, but I know that the more important thing in a bit is in a business is that more money comes in than goes out. Like
Mm.
no amount of financial systems can top that simple logic, right? And you need to
Mhm.
think about, where is the money going to come from? So in the beginning, I actually, when I started my business, I had a large client that came with me and that basically paid for, was for the first 3 years was maybe 70, 80% of our revenue,
Mm.
right? And you start to think, okay, well, I'm going to get some consulting revenue and I'm going to plow that has a decent margin. Or I didn't think that way. It just said there's going to be a good amount left for that. Then I can hire another person. I can just see that I can pay for that person for 6 months so I don't feel guilty about making them quit their good job, right? um but I think you really take it step by step. And I sometimes think that companies, when they start with just raising money, they skip a lot of over that. They skip over
Mm.
all those steps around, hey, how do I start? Like who's going to be the payer, right? Who is going to pay for my product, whether it's insurance or whether you're selling widgets, right? Um, so yeah, I would say like, we started in Kenya and Nigeria. Why Nigeria? Nigeria is just in terms of insurance. Insurance, you earn a margin off a margin. So basically you sell, you it's like you sell an insurance product for, let's say the premium is $100, and then we make 20 cents on the dollar, so we'll make $20 out of that
Mm.
100, right?
Mhm.
So you have to think about where are the zeros, where is the scale. So we started with Nigeria. It took us maybe 4 or 5 years to get that market to really get to an interesting scale.
Mm.
um, then once you figure out who your customer is, I think in the beginning we thought our customers would be seed and fertilizer companies bundling their bag of seed together with together with insurance, and then effectively it would be free insurance. So if you go into a shop, a farmer says, okay, I'd like to buy this bag of seed with free insurance, or I'd like to buy this bag of seed that comes with a free t-shirt. And here's where we got it wrong, right? So I say that with a big smile on my face because the company still exists. But when a farmer comes into a shop and they get an option between a bag of free seed with free insurance or seed with a free t-shirt, they pick the one with the t-shirt, right?
Really?
Of course, because the t-shirt is
Wow.
cool. Like I can wear the
Uh,
t-shirt today, but the insurance is like this really untangible thing that you have no idea what it is. You
mm.
may get paid or may not, and they're talking about things that go bad. Maybe maybe if you buy it, you'll curse yourself that it goes bad. You really don't want that, right? So yeah, so I would say in the beginning we tried to sell it together with seed and fertilizer companies. We did that up to 2019. And then
Mhm.
in 2019, we basically realized that for us to continue doing, if we wanted to have a business, we couldn't do that. We had to
Mm.
shift to groups. We had to shift to selling insurance, not through seed and fertilizer companies, not individually directly to farmers, but through groups. Groups meaning
Mm.
banks, development institutions, governments. Banks giving out a loan, the loan is packaged together with insurance so that the bank is able to is sure that if the farmers are not able to pay, but they are willing, they're not able because there was a drought, they're willing because they're good people, um, they can still repay because there's insurance. um, Basically that kind of channel through banks, development institutions, governments really took off. Or that's not to say it really took off. We always had it. We just felt that in the beginning we were like, oh, is the market big enough for that? Can we
Mm.
really make that scale? We were very conservative working with African governments. We're like, oh my goodness, this is just going to be some kind of nightmarish disaster between corruption and bribery. And how are we going to work with governments? Right. And I think we've really learned over the last 5, 6 years about how to do it. Right. You
Mm.
figure out, okay, you want to work with government. This is a stakeholder process. You got to figure out, okay, which different entities are involved in the decision. How does the decision work? We hold more workshops than I ever thought I would like to do and be responsible for. But Yeah, but it gives you incredible scale. Like in Zambia, as I was saying, we reach 40% of the population, a million farmers through one government program that reaches, basically gives farmers 2 bags of fertilizer and a bag of seed,
Mm.
and they pay part of that. They make a contribution towards it, but they don't pay the full amount. But they do pay for their insurance as they pay their contribution, and so that's
Mm.
enabled us to scale to a million farmers. There's a large program there where we pretty much only work with extremely vulnerable women, farmers, like youth-headed households, and there it's more about social protection. So there, you get insurance as part of, effectively, to enable that you can survive, that you really can make a living, and it can at some point really kind of get your family out of poverty.
Mm.
Um, and there, we also in Zambia, we also work with a credit provider that's giving loans to farmers, and that's more targeting kind of the more commercial farmers. So you see the whole scale of from very, very vulnerable poor to kind of more commercial farmers. And you can build a market like that. I think you need to be incredibly focused. You need to learn, okay, hey, it was really nice idea to work with seed and fertilizer companies. I remember when Women's World Bank invested in our business, we had pretty much pitched them, this is what we're going to do. We're going to work with all these international companies that you really understand, that you really trust. And then we went back to them and said, I know that we got your money. I and we really thank you for that. And we were honest to God, this is what we thought would work. But in the meantime, it's never like a one overnight decision to invest. In the meantime, that it's taken us to invest, we've kind of learned something. We now want to work with African governments. And we're going to include insurance into their programs. And you can imagine, like, they'll be like, oh, okay, that's not really what we signed up for, but okay, let's see. But yeah, I think it's really worked out well for us. And
Mm.
yeah, you can really get to scale. And I think it really also resonates with like when we were starting the conversation, when I said, I think it's really important to build these countries from the ground up together with the institutions that are there. I really believe that a lot of the governments, development institutions, banks, NGOs, agencies that we work with are really in there for the long term and are really trying to grow the markets that they're in. Anyway,
Mm.
so yeah. And you can't do that if you come with your own presumptions about what it should look like. It's going to look the way it looks.
Hmm. Well, and it seems to have really worked because this spring you just secured $20 million to fund rapid expansion with plans to reach 100 million farmers by 2029. So congrats on that milestone. I mean, that's really exciting. I want to reflect back what I just heard you say, because there were three things that I think were really important in your answer about scale. The first was strong foundation. You didn't scale immediately. You built a strong foundation in terms of your team, in terms of your finances, and in terms of your solution. So like you tested a few things early on to see what wouldn't work. And I think that's really important. The second thing I heard was partnerships,
Mhm.
partnering with those who have the ability to get to low income people who wouldn't otherwise have insurance,
Mhm.
and working through partnerships with financial institutions, with governments, with international organizations. Sounds like that was really important. And then finally, and this is the thing I think is most critical, and I hope will shift our conversation for like the last part of our conversation, and that is designing with end users in mind. I mean, that insight about people preferring t-shirts over insurance if they're going to get something free alongside of their seeds is such a great insight about the preferences of people and kind of the way that people think, and should really change how we work with people. Women's World Banking often talks about, you've probably heard us talk about women-centered design,
Mhm.
um, and designing with women in mind, which might be counterintuitive if we have a mental model in our heads of what a user would look like. Like I just had a mental model in my head of a very responsible farmer who would like definitely choose insurance over a t-shirt, which isn't always the case. And so I think that's tremendously important. I'd love to now turn to talking about those end users. Um, First, I'm sure you have a million stories, like millions of stories of individuals, but I'd love to just hear one. Like, is there a particular story or end user that illustrates the value of insurance and the solutions you're offering?
Look, I think if you, um, the particular story that comes to mind for me is really around access to credit. So at the moment, so Zambia is one of our largest countries, and Zambia for the last 5, 6 years has been insured by us. But every season we had payouts, but they were relatively small, like small pockets of droughts and dry spells. And this year in Jan, Feb, like so, farmers in Zambia and in Southern Africa as a whole, and Zambia and Southern Africa Zambia particularly is a breadbasket for East and Southern Africa. Zambia produces and usually is an exporter of corn or maize. Now, usually they plant in November, and then basically by December, Jan, your maize is knee high, kind of comes to your hip. This year in January, rains pretty much all the way disappeared for Jan, Feb, March. And so if you would drive through basically from March onwards, I think the president of Zambia declared an emergency, a drought emergency in March. And I remember like apparently it was very interesting because this is the first time that a country at this wide scale has had not that they've had a drought, but that they have a drought and insurance. So the president, this is maybe not the best example, but I just it strings to my mind. He goes around and tells people, "Yes, I know we had a drought, but we have this guy called insurance, and he's going to help us." And I just think this is it's fascinating, right? Because it's for them it's something very personal. And I've
Mm,
seen this in everything that we do, like right. So when you're working in these markets, now we're handling probably the largest insurance payouts in Africa at this point for this drought. It's tens of millions of dollars, right, that are going out to farmers. And I'm super interested to see how that will. You talked in the beginning when you introduced the podcast about resilience, because we really see when resilience for us really means what you said afterwards is bouncing back, right? And what we're seeing across now is that we've seen it in a couple of markets, but I'm very curious to see how this will work out in Zambia, because usually what you see is like farmers' yields are, let's say they're 2, 3 metric tons. And then when they have a
mhm,
drought, it's basically goes down to maybe half a metric ton. So it's really your income is decimated, not by 10%. It's not inflation that we're talking about here. It's just total, imagine COVID, but without your COVID relief bill, right?
mm,
It's basically there is no income. There is nothing that is going to save you. But all of a sudden now there is this thing that is going to help you still buy seeds for the next season, still buy fertilizer for the next season. And usually what we see across our markets is that people actually bounce back within a season if they have insurance, right?
mm,
And I think that's if I think about what insurance is really supposed to do, it is that. Right? If you think about climate adaptation, it is having the knowledge. And I think this is interesting, right? Because people say, well, if they have insurance, they should be able to invest. But in the markets that we work in, people don't trust that there is this guy called insurance. And they don't trust that there's this guy called insurance is actually going to pay. Right. So I know that, like in a couple of weeks or so, we're doing a big payout ceremony. And what we do as a business, we go out there with these huge dummy checks and give them to
wow.
others. And then afterwards, people get cash, right, in their hand. And there's such a huge demonstration effect from that cash. And you asked, I'm just trying to remember, like somebody said to me, I've been to so many of these payout ceremonies, and people would say to me, "Well, at least we know tonight our tummies will not be empty."
Mm,
And I think it's very much, you really feel that that these cash payouts, they're not handouts. They're really kind of, to me, they're very much about dignity.
mm,
Dignity, because we talk about, for if there was a drought, there personally, right? It kind of hurt. Like when I grew up, if there's a drought, the thing that would happen is that there would be on Dutch TV, there would be some kind of drive, donate for the poor in Africa,
mm,
right? I really feel that insurance is kind of like, okay, so you've paid up your sum so that you don't need to wait for that handout. And I think there's
mm,
just such incredible dignity to that. I think there's such incredible kind of, if I think about development, there's so much power in that,
mm,
right? That you're no longer relying on this kind of handouts. You have, the Zambian government is upping their insurance premium this year. I think that's amazing, right? Because before that, you know, they would have never thought about it. But this payout for them, it tells you they didn't really trust that the insurance companies would pay either, right? Right. So they didn't. And their government, they are all educated people. we're not saying that, they need capacity building or training. They need, they are not educated, they're illiterate. And they're all literate. Some of them have PhDs.
Mm.
You know, they've been to whatever, Cornell, like, but
Yeah.
they don't really trust that their own institutions will work. And so I think it's what we do. I just think it's about building those institutions at scale. And I find that, yeah, I find that incredibly encouraging.
Mm. That's wonderful. Yeah, I love that story. And I love that insurance premiums are going up, and that's a good thing as well. Yeah, yeah. I can't believe our time is running out. I could talk to you for another hour. I must say, Women's World Banking is so proud to call Pula not only one of our global network members, but Women's World Banking's asset management was one of the investors you inspired to back your and Thomas's vision at Pula. I wonder, thinking about empowering the aspiring entrepreneurs who are thinking about innovating in the financial inclusion space, like what advice would you have for aspiring entrepreneurs who want to get into this same space of supporting women in finance or agriculture?
Um, Look, I think, as I said, and I think this is kind of a theme that you've got me on today. I think institution building, right? I think there's just such power in that, and it's. I'm a big Pula means rain. Like the company I
Mm,
started, Pula means rain, and it doesn't just mean rain. It means I grew up in Tanzania, and where I grew up in Tanzania, we called rain mvura. In Rwanda, where I lived and I worked for the Ministry of Agriculture before I started Pula, we called it imbura. In you Across East and Southern Africa, you have like, I don't know, 260 languages, something like that. And the word for rain is pretty much always the same, right? And I'm totally into languages. I love languages. I think they're
mm,
such an interesting thing to understand how society works. Um, and like at some point I was on a trip with my husband through Botswana, and we came into Botswana, and I was reading through The Lonely Planet, and it's telling me that in Botswana the currency is called the Pula, and Pula means rain, but it also means hope. And it is
mm,
also the currency, so it means that they count their money in droplets. And Botswana is a desert country. Like I don't know
mm.
if you met if anybody of you has watched the movie, I don't know, like this Kalahari Desert, where this kind of like, this ping pong ball or this Coca-Cola thing drops out into the desert.
Yeah,
It's
I know
basically,
that one. The Gods Must
right.
Be Crazy. That's what it's
Yes,
called.
that one.
So
The
good.
gods must be crazy, right? And so in this country, which is basically a desert country, they've realized that rain is so important that they'll count their money in raindrops.
Mm,
And we called our company Pula because, one, it was short. You need a short name for a company. And two, I really loved that we would insure the rains in a company that is called Rain or slash Hope,
mm,
right? And if I think about what would you like, what could inspire people to, for me, it was always about building institutions, right? Building institutions that last. And as I said, like, my grandparents were missionaries. My parents were kind of development aid workers, and we start in our generation, we start businesses, right? And it's those businesses that build, I think, in many ways, build an institutional foundation, because there's always an interest, and businesses keep you very honest in many ways, right? Your customer's not happy with your product, they're not buying it again. Like I've sat across from my customers and they'll be like, Rose, I really like you, but if you can't change your product to pay for and to cover this particular risk, then next year I'd rather just keep the money
mm,
and use my insurance money to compensate people who were losing their risk against something that we weren't covering, some kind of
mm.
manic disease at the time for some kind of crop. And I think that really, those kind of conversations with your clients really drive change. And if you're a business and you have to make money, you have to listen to that, right? And I think there's this really good part around, when you build institutions that are built on profitability, to some extent capitalism, right? I studied Marxist economics, right? So I'm very, I always, people, like, I studied both a traditional economics degree and then a Marxist economics degree. So
That must have
and
been fascinating.
oh, I
That
love it.
that could be a whole different podcast.
Yeah, yeah, but like I'm just saying, it's like you want to. I think if you build institutions on the basis of that, hey, they have to survive because they have to respond to market demand, there's something very strong in that. And there's so many other institutional pieces that need to be built in, whether it's in the US or Europe or Africa. And
Mm,
I think there's so much satisfaction in doing that.
mm. I love that. I love that. Well, Rose, thank you so much for joining us today. I really appreciate your insights, and I have so many notes. Honestly, we could do a whole nother podcast on
Marxist
Marxist
economics.
economics, leadership, like women's leadership. And also I think like how to make an insurance business work. I feel like I have many other topics I'd love to explore with you at some point. But thank
Well,
you
thank
so
you so
much for
much.
joining us. I know it's evening your time as well. And I appreciate you giving up the time so that we could make this work morning my time too.
Okay.
Thanks.
Awesome. Thanks.
All right. Well, everybody, like I said, I have a bunch of notes, and I usually like to sum up our conversation from my notes. I loved when Rose said, insurance means dignity. It means you don't have to ask for a handout. And I just think that's so important and so fundamental to meeting people's needs in a way that works for them. Rose also talked about listening to customers. She talked about sitting across from a customer and hearing feedback and trying to figure out if they can incorporate that feedback. Testing and failing quickly and trying to see like what worked and what didn't work and how to build a business on a really strong and sustainable foundation. Um, she also told that beautiful story of somebody getting a payout after having endured a drought or a disaster of some sort, and their response saying, we may have lost everything, but at least we know tonight our stomachs will not be empty. And I hope that for everyone in our world, for especially the 840 million women in climate vulnerable geographies who say that if they had an emergency, they wouldn't be able to cover the cost of it. And I hope for them that we're building a world in which their stomachs will not go empty. We really cannot let this climate crisis erase the development strides that our global community has made. And as key decision makers approach crucial discussions during key moments like COP29 coming up, I urge all listeners to pay close attention to Women's World Banking's social media channels. We're on all of them. Just look us up. We'll be sharing research, new data, and stories of real women's experiences, and also solutions like the one we just heard today from Pula. Economic modeling shows that by 2050, under a worst case scenario, climate change will push 158 million more women and girls into poverty. But financial inclusion can prevent much of this. So please stay informed as we hear these conversations happening around the world. And finally, if you found today's discussion valuable, please don't forget to subscribe, to rate, to leave a review on your favorite podcast platform. I actually stole my mother's phone from her out of her purse the other day and subscribed to the podcast. And she she told me a week later, like, it's so weird. Your podcast came up when I was listening to my podcast and I loved it. So if you have somebody else that you would recommend listen to the podcast, even your own mother, please share it with somebody. Your feedback matters so much to us because it helps us bring you content that resonates. So stay engaged, stay informed, and we look forward to connecting with you in our next episode on November 21st. Thanks so much.